Welcome back, ladies and gentlemen. It's Monday, Columbus Day in the United States. What does it all mean? Well, the banks are off. The stock market's still open, but the bonds market is closed. So how's that going to affect everything that's going into the open later on today? But first, we've got a few things to be talking about in today's live. We have a war in Israel. We still have war in Ukraine and Russia. I'm going to be talking about another war that is happening underneath us, and not many people are paying attention to it. We'll be diving into that story as the live progresses. We're going to be looking into Bitcoin price action. Bitcoin is looking very interesting right now, and a lot of people want to know if Bitcoin is going to hold its current stance. Are we still optimistic in cryptocurrency? We're going to be diving into that bad boy very shortly. But I will suggest the following. Given that the bond market is closed, we're not going to get the true sense of how the market is going to translate this information regarding the war in Israel, okay? So if you are trading, today is a retailer's playground, just to be right with you, all right? Why? Because if the big money in the bonds isn't being able to be moved, then we are going to be anticipating a reaction from it later on going into the open in Asia this evening. We've got a big week as well. Inflation data's coming out. So we've got lots to work with. And I will say this, we're going to be doing a live in the evening as well, just to summarize the marketplace and see what happened through all the madness that has been going off since this war has happened. So ladies and gentlemen, let's get with the flavor and let's have a conversation. All right then. So firstly, let's just quickly have a little scour about what's been going on. Bitcoin is taking a very interesting drop to the downside. I guess all the guys that were pumped about Bitcoin's move are no longer pumped about Bitcoin's move in terms of the short-term marketplace. Going over to the dollar dominance itself, we've got dollar showing some very interesting price action, still holding out at key zones. And we also have oil right now showing a very interesting position that we had a gap up on the news of the actual Israeli war. And this Israeli war is usually the market doesn't really react to war the way we would anticipate it. Why? Because it's already been built into the charts. You only have to look at aerospace and defense stocks. They've been sailing upwards very nicely because they've been getting the contracts for all this preparation for war. All right. Going into the NASDAQ itself, you can see we got some very interesting plays happening right now. NASDAQ comes down to only come back up. We've got a gap that we need to be seeing being filled in the NASDAQ itself. But more importantly, the volatility index has gapped up, which tells us how many people are favoring higher prices against lower prices. And when this bad boy gaps up, that tells you that there are a lot of people right now not liking the upwards trend in the marketplace. Okay, so most of you are probably wondering right now, what is the story? What is this war going to do? Because it's a sad thing what's happening in Israel. Okay, regardless of the political indifferences and whatever story it is from religious points of view, people are getting hurt, bruv, and that's the sad truth. But the sadder truth is money still moves. We can't stop the way the markets operate. They're either going to move up or down, and that's it. Money still has to move, and that as such is the way life rolls, okay? So here we go. They've regained control of towns outside the Gaza Strip, all right? Everyone is, look, it's a sad sight, okay? And there will always be this problem with regards to Israel. They want to get rid of the Hamas and all of that stuff. It's not good. Okay, and tensions are now starting to get a little bit fruitful across the board, which is why this war could have a big impact on oil. Why? Because the Saudis right now, only on the 20th of September, said that they would look to try and seal a normalization with the Israeli government, but now they're looking like they're going to be stepping back a little bit. Why is this a problem? Because when you think about it, this guy is in charge of the world supply in principle of oil, okay? OPEC have already declared that they're going to be cutting the oil supply, which is why we saw a little bit of a rally in oil to the upside. Now we're going to be getting this situation with the Saudi Arabian kings, and they're going to be telling us that oil is probably going to get cut again. That's going to squeeze a lot of the marketplace. Going back into oil itself, you can see bright as day that oil right now is showing a very interesting move to The upside and what we said previously about oil is how they have been dropping price, marking it lower in preparation for a move back up. It makes you think, did they know about this beforehand? Of course they did. Come on, this war is not out of the blue, okay? And look at how long the war in Russia and Ukraine has been going on for. They're making money, and that's the sad truth of it, okay? Now, looking at oil's price on the higher time frames, we'll go to the 8-hour chart. You can see that it's doing a very good job of holding out inside of this zone. And something that you want to do from a technical standpoint is when you see these sort of drops in oil's price, okay, they are all motivated by investors feeling the fear. And as I've said to you before, the way they're going to be playing oil, given that we've got a reduction in the supply of oil, that's going to add weight to investors feeling fearful, because that's what they do. They go to commodities in times of fear. Check this out. Gold. Gold is now starting to gain. Now, this is something that I've been talking about with the members of the channel in the platinum tier section on the website. Gold, should I say, has been acting as a hedge, okay? Just look at how gold has been behaving, right? So, 1 hour time frame. Well, no, let's extend that out a little bit. Let's go to the 8-hour chart just to see things. Here we go. So, look, gold has been taking a bit of a drop to the downside, all right? They are hedging themselves. Equity investors are starting to kick up their activity in terms of hedging. Now, when gold goes down, once you start seeing articles about the safe haven that gold is going to bring, okay, this is where investors, or the guys who have hedged themselves with gold, are going to start making a return on investment, which is where you're starting to see gold looking like it wants to try and make a return back up. Now, remember, the bonds market is not open, so we're not really going to see the true benefit of investor sentiment when it comes to the story in Israel, okay? That's one thing you've got to take into consideration when you are looking to take trades or investments, for the better word, okay? Now, yes, they are chess players, bro. That is correct. Yes, they are chess players. They know beforehand. Why is everything all set up before this actually happens? Gold, it's been set up to absorb this war in Israel, in my opinion, because hedging activity has increased across hedge funds across the board, okay? That means they're buying puts. That means they're going into cash. Well, we can verify that. Now, gold is starting to try and make a little bit of a move up, okay? Now, we'll only know from a technical view if gold is going to sustain itself if it can actually get beyond the 50 EMA, all right? Now, that leads me over back into Bitcoin. Where is Bitcoin in all of this madness? Is Bitcoin going to start acting as a hedge? We've got a violet vector candle coming into play on Bitcoin. And of course, the market opens in the next 6 minutes. So we're going to be diving into how the market is going to react to the news. We haven't had a full reaction just yet. Quickly going over into Tesla, we can see Tesla's had a little bit of a gap down right here, but not so significant. And then we've got an Nvidia, also the same story, a little bit of a gap down. Well, a gap up, if I'm quite honest with you. I can't really see it too clearly. It's not actually gapped up at all. Okay, so there's not really a gap up or a gap down, but there is a gap up here that Nvidia would need to close. The problem is the stock market might actually have a favorable reaction going into today. Okay, that's the crazy thing with war, because it means money is being circulated. Oil's going to start going up because investors are feeling fearful. And then, of course, gold's going to go up because investors want to see the safe haven. I'm telling you, when they start saying that gold is a safe haven, that means that the hedge traders are going to be selling into the guys who are trying to go long on gold right now. Okay? So we've got very interesting points of interest in gold moving to the upside. But again, the problem that we do have is, and always will be, the dollar dominance. And as long as dollar maintains this area on the 50 EMA, then there is a good chance that dollar's going to keep on climbing up, ladies and gentlemen. You've got to take that into consideration, all right? Where's BRICS right now? No. The story with BRICS, okay, is very interesting. Why? Because they want to come away from the idea of de-dollarization. But China is one of the bigger holders of US bonds, okay? They're not going to just go for the de-dollarization. They would have to get rid of their bond holdings, okay, to be successful and be like, look, we've covered ourselves. We don't hold any more risk when it comes to holding US bond treasuries, okay? De-dollarization ain't going to be happening for a little while yet, ladies and gentlemen. Even if the dollar, the debt for the US dollar, should I say, has increased by $275 billion in one day, and it's climbing, too many people are holding bonds for the US. The dollar is still king, ladies and gentlemen. And we're only going into the repeat of history. Human nature doesn't change. When there's a war, get back into dollars. And that's what it is. And then use those dollars to go and service commodities, oil, gas, wheat, soya. Okay, look what happened when the Ukraine invasion happened with Russia. Wheat just shot up. Okay, now it's come back down again. But you can see the impact of investors. They will always go to commodities when there is a time of war, if there's a time of uncertainty. Not even to add what's going on this week, ladies and gentlemen. We've got CPI data coming out. So there's another nail in the coffin with the word on the street saying that they are projecting it to increase in the month, but relatively stay lower on the year-on-year readings, okay? So we're going to have some very interesting volatility this week. And given that we are down a bank holiday, not down a bank holiday, but given that we don't have the bonds market open, we're not going to see the true sentiment of investors across the board right now, okay? There's a problem right now. You can see that. 5%, the yields are still high right now, guys, okay? So keep that into consideration, all right? Just before we get back into Bitcoin price action and all of that madness, I want to just address something to you. Technically, we do have 3 wars going on. We've got the Ukrainian-Russian war. We've got the Israeli war right now with the Hamas. But the third war that's happening under our breath, under our noses, is the tech war between China and the US. Look, the US and China are not going to be getting into this stuff. We're not going to see that kind of war. None of this is going to be happening between China and the US. How can you go to war with the one country that you hold most of its debt for? Doesn't make sense. Logic would say that you would get rid of that debt and that exposure, and then you would want to try and invade it and all that madness. That makes sense. You're not going to tie yourself to a country and then try and declare war on it. So China and US have it's what I would call, or what economic heavyweights would say, economic imperialism, which basically means who can do it bigger and better. All right? Check this out. Not so long ago, this gentleman left the Pentagon. He's the chief software guy. He's the guy that dictates cyber defenses for the US. And he says that the United States is behind China like no tomorrow. He just can't stand it. All right? China is heading towards that global dominance in relation to the AI market. All right? There's lots happening underneath the US's nose. The US is more concerned about military, okay? Because they still think that war is like this, okay? Creating fighter jets, contracts for companies, aerospace and defense companies. They're killing it right now. They're making fighter jets, yet China is doing something a little bit different. China targets 50% growth in computing power in the race against the US. This is the war, okay? This is what's going on. Now, when you're hearing about China making big moves and spending so much money on AI development and computer power, that's going to dwarf what the US is doing. You can have a fighter jet that is absolutely fantastic, but I've got an AI system that can override where that fighter jet goes. What happens there? Now, I know the US has its own systems. I get all of that, but the US is behind right now, okay? Now, you know, when it comes to the semiconductor market itself, you know, there's this race for chips to make them smarter, quicker, give you information sooner, make life easier for people across the board in terms of using computers to solve problems. You get the idea, all right? Now, we know Taiwan is the bigger player when it comes to the semiconductor industry, okay? Check this out. Some of Congress wants to cut the aid to Ukraine and send it over to Taiwan. Why? Because China is effectively trying to do beef with Taiwan. China wants to overtake Taiwan because Taiwan is the hub for the semiconductor business. So the US wants to cut some aid to Ukraine, send it over to Taiwan because the China and the Taiwan feud is starting to grow a little bit. All right? But then on the flip side to that, ladies and gentlemen, you've got Taiwan probe firms suspected of selling chip equipment to China's Hauwei despite US sanctions. This is what I mean. Economic imperialism. You know, it's who can do it bigger and better, right? Now look at this. South Korean firms get an indefinite waiver on US chip gear supplies to China. How have they managed to do that? Look at the companies in China and then look at the companies in the US. Google, Microsoft, Apple, Amazon. They are single entities. They can do what they like, all right? The government has gone to Google. We want data. We can't give it to you. That's not how it works. Yet companies in China, like Hauwei, Baidu, okay? They're all done in-house. It's whatever the government says, And if the government is working tight with companies like Biden, Huawei, they're pretty much dictating what they do with the information. So they've got the exposure to these companies, big boy companies, big economies, and they can get them to do whatever they want. That's the difference. That's why the US is behind, because there's no communication with the bigger companies, because it's the land of free and the brave. You can do whatever you want. You know, you're free to do your own thing. That's why Google ain't working with the government, because it's an infringement on rights, okay? That's the difference between companies in the US and the companies in China. They got free roam to do what they like, but China doesn't. And if they're going to want them to give them information about behaviors of people, data, and what have you, they're only going to be the company, well, the world, the leaders, or the country that's going to be succeeding in the realm of AI, because they got the backing. So with that puts things into perspective for us, okay? China's chip equipment firms see revenue surge as Beijing seeks semiconductor self-reliance. Going back into what Biden tried to do, tried to put a cap on the exposure that China has to some funding in regards to the semiconductor area. Now China's doing it all by itself. They want to do it for themselves because there is too much of a reliance on the US dollar. They have to rely on the US market. Now Taiwan stepping into play as the semiconductor player. And now you're probably thinking, okay, Tino, you're giving me all this information. How is this going to help me make money? Well, on the back of war, this is the truth. You know, if oil's going up, then the price of oil is naturally going to keep increasing because investors are going to be feeling fearful. If we've got this US-China war happening in terms of the tech market with semiconductors and who's going to do the bigger and better computer power, here is how we can effectively exploit that. Check this out. You've got a number of semiconductor stocks. You might know this. QCOM, household name, long-time leader. And then, of course, you've got NVIDIA, all right? And then you've got semiconductor ETFs. Now, if you don't want to buy the stocks, the ETFs will probably be a good option. So here is the semiconductor ETF. Now, remember, if China is increasing its expenditure on computer resources, they're going to need all these chips, the semiconductors. Naturally, the semiconductor ETF is a way for you to limit your exposure when buying certain stocks, because some stocks might not have the volume, some stocks are too volatile, and some stocks might be too expensive. When you roll over to an ETF, you can see how well it's doing. $473 for an ETF contract right here. It's holding out relatively well. And with that just isn't just this semiconductor. You've got other semiconductors as well. Let me just bring up my list right here. Where's my list? Here it is. So, semiconductors. SMH, there we go. That's the bad boy I wanted. SMH Semiconductor. So, what have you got? Look at this one. $146, doing exactly the same thing as the other ETF. You can see it's basing out. I'm not saying that this is something that's going to happen overnight, all right? But China's putting too much money into the AI race. That's the only way that you can really give it to the US, all right? We're all paying attention to what's going on with BRICS, de-dollarization. There ain't going to be no such thing as de-dollarization. It ain't shifting away from dollar or bonds because they are so tied up into the US debt. Okay, and the longer they hold on to US bonds, and more that they buy, the bonds market itself is going to keep on going up. Why? Or going down. Why? Because the yields keep on going up. That's the thing. Okay, if no one is buying, but China ain't selling as much either, then the yields are naturally going to keep on going up. Okay, so that could spark another rally in bonds from China if they don't decide to offload their bonds that they already hold, because they have been offloading, but they're not getting rid of them all. Like I said, China and US war, tech war is where it's at. We will never see this sort of behavior with China and the US. In my opinion, some of you might beg to differ, but we will never see that because they're in bed with each other. There's too much at stake. They've got money tied up. Japan, like, come on, Japan is the biggest bond buyer in the United States. They ain't going to be doing that too well. That's why the dollar yen, very interesting price action for dollar yen, okay? Still going up with the prospects of $150 yen yet again, okay? So keep that in your minds, ladies and gentlemen, when you're looking to try and exploit this, all right? If buying certain stocks isn't for you, ETFs could be an option, all right? Because that's where we're going, the semiconductor business, AI, ChatGPT, all of this stuff that you are using as a user ain't going to be programmed very well if they don't have the semiconductors to compute it, okay, or deliver it. Look at how this ETF rallies. Only in 2020, look at the rally. And this is the weekly chart, ladies and gentlemen. And they've been basing out and holding out very well. So this is a money market, okay? So if they're seeing the promise is going into semiconductors and the collection of stocks that makes up this ETF, naturally we're going to be seeing the ETF game in the semiconductor business succeed. Put that in your minds, ladies and gentlemen. Look, all these stories that you've got here, okay? They just roll things out for us just to make us think, oh my God, oh my God. But the bigger picture is that if China's spending the money and investing more in AI than they are in military, they know that the military items ain't going to work if they ain't got the chips. That's the way the cookie crumbles. Going into this week, ladies and gentlemen, it's going to be a big week for the marketplace. Why? Because on Friday the 13th, we have earnings announcements from the big boy banks. JP Morgan, BlackRock, we've got Citigroup, Wells Fargo, and everyone's all on their backs on BlackRock. Oh, BlackRock is the bad thing and all of this stuff. Sadly but true, these guys run the world. $642 a share. That's the story, with the projection of maybe not so good return on their investments or the earnings per share. But you got to understand, BlackRock, it doesn't matter if they make money or lose money. They hold too much of it to be worried about losing it. That's the truth. Whether you have the conspiracy about BlackRock and the $9 trillion market cap, not market cap, the value of investments that they hold, these guys run the show. And for $643 a share, I think that is a steal, in my opinion. We said that about Nvidia at $219 a share. And look what happened to Nvidia. Shot up. But Nvidia is an example of what is going on with this AI market. Let's get into the charts, ladies and gentlemen, and understand what we've got going off for Bitcoin, because you're all looking at the chart saying, okay, Bitcoin, Tino, this and that. Let's have a conversation. Scary hours, 9-inch oil dipped wick. Nice, I understand that. So what happens to the market when the US starts losing this war and defaults in debts? How are they going to pay back the bonds? This is the thing. The bonds market can keep on tumbling. Look, go look. Let's just look at this to put things into perspective. This is the 10-year bonds market, okay? Let's go on the higher time frames of on the bonds market. Just understand where we are, okay? This is the data from 2000. We're in very unprecedented areas, just like, 87. That would be the craziest point, and that was back in November, okay? They could go beyond that point. There could be a problem if they do not want the bonds, and the debt of the US is really bad. They're just going to keep printing, ladies and gentlemen. That's the truth. And the only way that they're going to get squeezed out is investors will still keep on showing preference to US bonds if the yields keep moving up. Look at the subprime mortgage crisis back in the day. This is where we are. Subprime mortgage crisis of the yields is 5.21%. Just go back over here. What did we have here? In 89, they were at 9%. Going into 95, that's 7%. So 5% isn't really a bad thing, and that's on the 2-year. Going into the 10-year bonds market, look what happened on the 10-year. That shot up to 15%. And when was that? In 79. That was in 81. So regardless of the date, okay, human nature will still be the same. All right? We had a recession there. We had a war. We had all sorts happening. What I'm trying to convey to you is where we are right now on a 4.7% on the 10-year. They're already talking about a 5% 10-year and even a 6%. All right? So we're not in areas that are scary yet. That's the truth. The volatility index is not giving us the truth of the move just yet. Look, this was COVID, and it went all the way to 100. If you managed to watch the volatility index on that day and it hit 100, you should have put the house down and gone long. Why? Because a reading above 30 promotes the idea that everyone is scared and they are fearful. So a reading above 30 is you buy. A reading below 20 is you short. Okay? Look at where we are. 18. That's the reading. So it shows now that there are effectively more puts being created than there are longs or calls. That means they think that the marketplace is going to drop. So as the volatility index goes up and hits the 30 mark, investors will be like, oh my God, the market is crashing. I can't believe it. That's when you start buying. That's what the volatility index has been saying. And they've been coming away from the volatility index because even though for the past 70 years, it hasn't really given us what we wanted to see from it from a theoretical point of view, they're now starting to come to the idea that maybe the volatility index is showing the true signs of where people's minds are in terms of fear and greed in the marketplace. So keep an eye on the volatility index, ladies and gentlemen. That's going to tell you where we are in terms of investors' fear. But right now, they're saying that investors are really fearful across the board. How? No, they're not. The volatility index is showing that everything's fine. NASDAQ is up 29%. S&P is up 13%. That's not fear. Going into Bitcoin, ladies and gentlemen, let's put things into perspective. Right, got the market open. Let's have a look at what we got right here. So 27,500 Bitcoin currently holding out. We've got the green vector candle recovery region. Fine, that's okay. Range daily low hasn't been tested yet for Bitcoin, but we're expecting a little bit of a retrace back up. Remember, the bonds market is not open. That's going to have an impact on investors across the board, because if they can't see what the bonds are doing or the yields, you're going to find it a little bit difficult to really gauge where the sentiment is at, all right? The market is prone to lots of volatility given with this war in Israel, so you want to be trading very, very cautiously. Quickly going back into the calendar itself, we've got nothing happening at all other than tomorrow, Waller speaking, and then the CPI data coming out for the US, or core price index coming out on Wednesday, and then, of course, Thursday, the CPI data. Now, given that we're just looking at Bitcoin for a second, quickly going into the Bookmap for a sec to have a look. We've got the VWAP happening right here. Logic would say that we expect Bitcoin to come and test this VWAP because it hasn't taken the test of the VWAP in a little while. Each time it goes to that point, it rejects it. And we know what Bitcoin is like. Just looking at the chart itself, you can see we got commitment downside here, man. Big boy liquidity at 1,047 Bitcoin orders at 26,650 there or thereabouts. But we've got this area here which shows commitment by limit buys coming in. And the darker the color, so if it's red, dark red, and orange, that shows you that we've got big interest of traders coming in to fill limit orders, to get them filled. That means that they could cancel in this area. So keep an eye out on this zone. This is the Bookmap. Go check it out, bookmap.com, okay? Be mindful. If this area stays static in the order book, there's a good chance that they're going to fill these orders, all right? The higher price goes, the more likely that these orders will disappear. But we're going to see the proof of that if Bitcoin can make it back to the VWAP, which sits at 27,650. So keep an eye out on that. The limit buys, limit sells are coming into play, which is minus 33%. So we know limit sells are being triggered. Look at that big red order coming in right there. 373 Bitcoin orders and 334 Bitcoin orders between 27,600 and 27,550. There's commitment coming in. They want to sell from this point. So keep an eye out on that region for Bitcoin. Now, quickly going into the gem data. This is the crypto flow. And we're having a look at what's been pumped, or not necessarily dumped, but this gives us an outlook on what unusual volume is coming into play in assets across cryptocurrency. So you've got AKRO, you've got Index, Matic, you've got Ethereum, Link. These are all unusual bouts of volume, but it's not that much, okay? And you can see you got spot futures, 768,000 on AKRO. Let's just quickly go into that bad boy and have a look at that. USDT, let's have a look at where that is. Okay, so look, you've got a big move up, and they're also bringing it back down at the same time. Vector candle recovery right there. Happy days. So they've recovered the vector itself. Usually what it likes to do is pumps up to come back down, pump to come down. There you can see they've already made the pump up to try and come back down into the area that they actually accumulated from. So keep an eye out on that. Going into another asset, let's go to IDEX USDT. And we're going to have a look at that. Big move. Okay, so we got a big move up to drop back down. Consolidating inside. Again, this area holding out inside of this zone. Range daily low has been taken. I'd expect a little bit of a retrace back up, continuation lower. Why? Because we've got interest coming down inside of these areas down here, which are very, very important from the last time they made the big move up in this asset. The faster they move up, ladies and gentlemen, the less likely I'm less likely to believe it's going to sustain the move higher, okay? Slow trend. This is a nice trend, up and down, and it's riding the moving averages, giving us the idea that momentum is still in play. Remember, moving averages are laggard. They don't do much, all right? They just give you a snapshot of where the volatility is and where it has been, okay? So keep that in mind. Look at this. You see these moving averages? They're fanned out. Whenever you see moving averages like this, you want to get ready to start running shorts. Why? Because it shows that the moving averages on the smaller time frames are expanded. So we've had short-term volatility, which naturally has to come back into the mean of the marketplace. Okay? Going back into that, let's quickly go into the market flow. Let's go into the options, actually, because this is going to be important for us when it comes to understanding what Bitcoin is getting ready for. Okay? Just look at the data here. we don't really have that many options. It looks like they're bearish. That's what this is saying. But look at the contract sizes. You've got 26,000, 200,000, 135,000, 28,000, 36,000. And these are calls and puts on favoring higher prices or lower prices in Bitcoin. When I change this to higher premiums, I don't get much, okay? So you can see someone's brought a buy put on Ethereum, okay? Favoring lower prices by December the 29th, okay? There's what, 200,000 right there, okay? You got the same again. Someone sold calls. So when you're selling a call, your profit potential is limited, but you do have a lot of exposure when you're trading like that, when you're selling calls, right? So 135K right there. Then you've got buy calls here, 106,000. And then this is on Bitcoin. You've got buy calls again at 208,000, which is the expiry on December 29. So it's a bullish sentiment. We go into higher denominations, we only see sells coming in at 292,000 on Ethereum. That's the only bigger contract size, right? So with that being said, going into the live order flow itself, looking at what we've got going across the board, where's the volume? Again, look, 16 million on futures, 37, 56, 51, 47, 41. Not much of liquidity going in. I want to see triple digit figures like 360 million, 602 million on ETH, 1 hour time frame. They sold $602 million worth of futures contracts, okay, favoring lower prices. Cool. What does that mean? Going into the high block, we've got some liquidation levels that pose a little bit of an interest. Currently, liquidity sits right now. Let me just quickly bring it up for you guys. You've got liquidity down here, which at 26,900 got $3.9 billion worth of long liquidations. That's where we are on the 7-day chart. Usually when liquidity is close by, the market, taking into consideration the tone, is likely to start working towards that zone, all right? But remember, look at the bigger picture in the last 6 months. Look at where the liquidity is at, right? We've now got a collection of $167 billion worth of long liquidations at 24,300, okay? Bitcoin is fading the marketplace, right? If the bigger picture is things are going down, then any move back up is a fade in the bigger picture, all right? Because you've got to remember, the stock market itself, this is what they do. It's a standard procedure, okay? NASDAQ moves up. Hold on. NASDAQ moves up on the higher time frames, like so. Drop, fade, drop, fade, drop, fade, drop, fade, drop. That's what we're saying. And you can see NASDAQ, deviation away from the moving averages, higher time frame is suggesting that we've got a very interesting structure forming right now, okay? We've got the vectors coming into play. NASDAQ is extended over 29%. Someone has to make some money off the back of this. That's what you've got to take into consideration. It's not going to happen overnight. And even a war in Israel hasn't triggered a black swan event, but that's going to have an impact on oil. So keep an eye out on that, man, when you're trading, okay? Quickly going into EXO charts for my guys that like order flow. Just want to quickly have a look at a couple of things right here. Let me just bring this up for you. Move that across. Oh, I've got Euro here stalling in and around this VWAP zone. Just going to have a look at Bitcoin on the 25-day chart itself. Let me just bring Bitcoin back up and have a look at what we've got going off here. Okay, so this is Bitcoin on the 10-hour chart. Cool. Bring it into the 15-minute time frame. You can see, look, the market ain't doing nothing today, ladies and gentlemen. Here we go. So Bitcoin right now at the 27,499. We've got the point of control for the 25-day chart on Bitcoin, okay? This is important because that's where most of the contracts reside. We are right now currently sat in value on Bitcoin, okay? The range itself, we've got the VWAP currently at the 27,720. Going down, we've got the value area low, which is at 27,345, okay? We might have a relatively quiet day because the bonds market are closed. We'll see a bit of volatility, but that volatility is coming in on low volume, all right? So keep that in mind. Deviation away from the moving averages, 50 EMA, that could be a promise. Remember, we've got the Bookmap suggesting the test of the VWAP. That's what we want to see, okay? But there is interest down below here that could trigger a move, okay? They're going to do something at this VWAP, right? Let me just look at Ethereum for a second. Ethereum has taken our zones. They've just cleared out these regions, 1,600 Ethereum, going into higher time frames. Look at that. This is what I mean about bearish, bullish markets. Okay, they make an initial move from an area of consolidation. They come back down straight to it. The only next important area for Ethereum is down here, and that's 1556. The same way for Bitcoin. If Bitcoin invalidates this zone, the 27177 zone, it's going to be a sight that's going to be sore on your eyes, ladies and gentlemen. Like, you can hope for Bitcoin to move higher and higher, but until they clear significant areas right now, Bitcoin recovering that vector candle region, fine, but aggressively sold off from there. I don't like that, okay? And you've got to be very mindful of it. Just look at what we can be going into. We've got vector candle zones right here, 26,337. And then you've got the last vector down here at 25. That's where I'm expecting Bitcoin to go. Because the cycle itself, or the way the markets are operating, okay? It's only showing me that flavor, all right? The only way that's invalidated, ladies and gentlemen, Bitcoin clears the high. That's it. So we've got all of this zone right here for them to really manipulate price and get traders in on the trades. There is liquidity at 32,100 with $144 billion worth of short liquidations. Bitcoin has a lot of work to get in. If it keeps on following the stock market, it's going to struggle to keep moving higher. Don't get twisted. Bitcoin to the moon. I'm cool for that. I want all that. You know, analysts are putting out projections of a $220,000 Bitcoin. All right, that's cool. I can take that and be like, hey, guess what? Bitcoin could go to 220,000. Yeah, that's not going to happen overnight. I know it's not going to happen overnight, but I'm going to go to bed at night knowing that I could dream about Bitcoin going to 220,000. All right? You understand what market cap needs to come into cryptocurrency? Again, the ETF hasn't been rolled out yet. BlackRock hasn't endorsed it enough. It's not been pushed yet. So until that ETF comes, we're not going to see the exposure to big capital coming into the marketplace. With that being said, ladies and gentlemen, going into the charts on the 5-minute time frame, I would strongly suggest that you just trade with caution with Bitcoin. It's trading sideways. We're not really getting that much of a flavor unless we do see this liquidity down here getting swept. All right? It's only Monday, man, and we've already had this madness across the board. Make sure you check into tonight's live stream, ladies and gentlemen, where we summarize the day's events and going into Asia tonight when the bonds market actually opens. Mad love and respect, guys. Take care of yourselves. Peace.